This one candle pattern has made me more money and is a credit to some of the most success I've had in trading than anything else. And it's really easy to use. I'll be breaking down exactly how you can use it every single day and apply it in your trading. How does this pattern actually help us? Well, first, it gives us a direction. Without direction in the market, you actually don't know where price should head towards. So you don't know what kind of trades you should take, and you have no idea where you should be either longing or shorting. You're pretty much guessing into the markets. That guessing will be removed by learning the simple pattern. Tell us who's in control. At the bare bones, if we look at the markets, it's simply bullish versus bearish. Are buyers in control? Are sellers in control? We want to be on the side of who's in control, and this pattern will exactly teach us that. And lastly, give us an entry. Of course, without an entry, we can know exactly where pricing is going, but we might just still miss that move because we don't know when is the most optimal time to actually enter. Next, we have to understand that we are in a constant state of a battle. And what I mean by battle is that there is two sides of every trading day, every trading move. And it's buyers and sellers. They're in a constant battle that whoever comes out on top, that's where price will push. This is when you get things like accumulation. That's usually the bulk of the battles. When this happens, movements like this. And whenever this is happening, us as traders, day traders, are looking to scalp, we're looking to catch smaller moves into the markets, no hold trades for days, we have to stay out of it. This is where 90% of traders make their mistakes. They're getting killed in these chop zones. So how do we get away from this mistake? How are we able to wait for the right moment to enter? Because we're not recognizing the correct moment to actually trade. And this is when that strategy, understanding the pattern that we have to use every single day, helps us. It's a pattern that not only gives us an entry, but also helps us avoid the chop. And if you've been trading for any amount of time, you know that more than likely the days that you clap your account is when it's chop. You see a red candle, you short. The next candle is green, you get stopped out, and guess what you do? You enter again. Then again, guess what? The next candle is red and you get stopped out. How many times? And I'm very curious, leave it in the comments down below. Have you gotten destroyed during the chop because you didn't know how to wait for it, or you didn't know how to actually identify it? We'll be fixing that in today's video. So what do we actually wait for? I told you what not to do, what to avoid, but what do we actually need to wait for? And it's really simple. It's much more simpler than you think. It's the first 5-minute candle of the day to build a range. Now we're going to go more details about this. It's not as simple as it sounds. We actually have to have a strategy around this, but it's literally all you need. One 5-minute candle to build the pattern. And of course, some of you are going to ask, what time zone? And guys, when we're talking about this, it's always in EST, and the first 5-minute candle is 9:30 to 9:35 candle. So that first 5-minute when the Nasdaq opens up, if you're trading futures. Now, these strategies can be used if you're trading Forex, stocks, doesn't really matter, but that's the most important time that you need to actually understand. So it's as simple as this. But now, okay, this 5-minute gets built. How do we actually use it? Before I show you that, don't worry, we will get to a quick sneak peek of a backtest session that I ran, and you'll see more of it later about the strategy and how to use this range properly as we dive into the charts. As you can see, a really nice healthy curve up that has dips along the way, but overall stays profitable and is consistent. But understand, any strategy can look good in a short amount of time. Any strategy can look good when you cherry pick certain trades, but we're looking for a strategy that not only works well, not only is simple and easy to understand, but also is consistent with markets. Works both if the market is bullish and also works if the market is bearish. And this is exactly what I'll be teaching you today. Okay, so what we're going to do is mark the 5-minute low and high of the candle. For example, if this was our 5-minute candle, we simply mark the wick high right here and the wick low. This seems simple enough, right? And this will be a range. And our goal is to try to trade and find a trade when this range is broken. Now, I know you're going to say, hey, this is very simple. We should just take a trade like this, right? A continuation lower if this was bearish. As an example, we can take a trade like this, right? Well, you are wrong. This is not how you're gonna use this 5-minute range. A lot of times people talk about ranges, we talk about highs, we talk about lows. The first thing that comes to their mind, and is by far the most common mistake that I see people doing, and is something that market makers are out there and use to their advantage to stop you at, is, hey, let me trade the continuation, let me trade the breakout, the breakdown, the short using the stop loss, the high of the candle that broke the range, or whatever other fair value gap they might be using, and they get stopped out. The trade ends up playing something like this. You almost short the bottom and instantly price reverses on you, and you cannot understand why. Hey, this was a nice bearish trend, 9:30 a.m. candle had built, the 9:35 a.m. candle has built. This moved down, but you quickly get stopped out. Then a second most common mistake I see, and this will be our second most common mistake, will be traders are trading a fair value gap. So here we would have a bearish fair value gap. If you don't know what a fair value gap is, I have a ton of videos on my YouTube channel teaching you the 3 candle formation. It's called fair value gaps and how they're very useful into the markets. But what traders do is they'll see this bearish fair value gap, break out of this range right here, short it, and get completely obliterated. I see this rejection right here, and they expect price to move lower, but they don't. It doesn't. And the mistake they're making are very simple to fix, but are just not thought by anybody. So you can see in this example, you could have seen the fair value gap that a lot of traders would have shorted, and I know this from being a live example because this was on Friday. I'm recording this right now on a Saturday. This literally just happened yesterday, and I saw a lot of traders get completely destroyed in this 5-minute fair value gap because they were expecting price to reject since the trend was bearish, everything was bearish, 9:30 a.m. open bearish, but didn't realize that the break below this a lot of times is what we call a trap into the market to manipulate a lot of these traders, stop them out, and drive price back up. Now, this is the simple and effective thing that you need to do. You must wait for the candle to close. When you break out of a range, you do one of two things, and we'll go over it a little bit more. One or two things. Number one is you wait for this retest here, and you get this rejection, but you don't enter the rejection unless the candle that rejected closes below the previous candle. So as you can see right here, we have this red candle here and this green candle here. You would only short this if after this rejection, this candle had closed below the low of that candle and continue lower. So then if that doesn't happen, you look for option number 2, which is then a close above the fair value gap, which we call an inversion fair value gap. As you guys can see right here, I have a little eye on it, and you trade back to the top of that range, or you aim for a simple 1 to 2R. I like to aim for a positive risk reward trade. So even though I lose 2 out of 4 trades, I'm still net positive because I'm trading with a positive risk reward. So as you can see, this is one of the easiest things that you can do, but nobody teaches you to really trade. This is how you use a 9:30 open and your first fair value gap of the day, which in this case was this candle right here, the 9:30 open, as your most important fair value gap of the day and your most important range of the day. But enough yapping, let's dive into a real example. This was Thursday 14th of the August. Pick some random dates in this backtest session. I can show you the data for, and as well I will show you some examples that literally just happened. So I don't like to cherry pick random examples through the year that anything can work. I like to show you what has recently happened so that you can go back, check for yourself, and see that this our strategy to work in and out, as well as actual examples of trades that we can backtest and learn from. You can see this is our 9:30 open right over here. We will mark the low to the high of the 9:30 to 9:35, which will be our first 5-minute candle of the open. So you can see this is our 9:31, and this is where we set our low. And this right here will be our 9:34, the close of that. So one more candle will become the 9:35 candle. So we can skip one candle forward right there. Then now this should be our end of 9:34. Can skip, and then the 9:35. That's okay. So what do we know here? We have a 1-minute bullish gap right here. So we're going to mark out this 1-minute bullish gap, and now we're going to stay patient and wait for price action to show the hand. Is price action when I want to break out and continue this, retest this and go higher, or we're going to get an inversion for value gap and potentially trade the move to the downside? So here comes our first trade. What would happen? We jumped a couple candles, but as you can see right here, we got option 1. Actually, it's 2 options. Option 1 was a a retest of the fair value gap, which is a bullish gap, as you can see here. And the next candle, look what happened. It closed above that candle. This will give us an extra confirmation to enter the trade. Confirmation would have not been right here. So what do? We simply take a long position at the close of that candle with stop loss below the fair value gap, aiming for a 2R. Really simple. So you can see we can go here, and I'm using the tool called Tradeful, which I do own. It's a backtesting platform, but you can go back and test any strategy that you like. And I think it's really helpful versus just diving into the markets. Try to guess. I'm going to risk 1%, and then we're going to execute this by order, and we're simply going to watch. I generally never seen this day happen before, so I literally have no idea what's going to happen. We'll see if this plays out or we get stopped out and I'll look like a fool. As you can see, we got a really nice move up, then we got a little bit of a move down, kind of chopping around, and this might take a bit, and there it is, the full TP. So this took, again, these were 1 minute candles, so this took about from 9:38 to 10:32. So to catch about 62 points in about an hour, that's really solid if you ask me. And when you're day trading, you have to understand sometimes the trade happens in 15 minutes, sometimes in 5, sometimes in an hour, sometimes in an hour and a half. It all depends on the day's range. This is a really solid 1 to 2 RR trade with very little drawdown. We did pull back a little bit, but as you can see, price held up, and we used the first 5-minute range as an understanding on when to look for the continuation. As you can tell, the 5-minute range is really powerful because we know when to look for a continuation or when we know when to look for a reversal. And that helps us not get stuck in the chop. That helps us not guess. So you can see here, if we look at this price action a little bit back, it seems like we had some 8:30 news. So for another confluence, you could even have this news high as your target, which would be a drawn liquidity of where price would want to end up to. Now for our next example, we're actually going to use price action from Friday. This was our range from the opening candle, which was 9:30, all the way to the 9:30, end of the 9:34 candle. So we simply see one bearish fair value gap right here, and there's another really small one up there, but this is our most recent one, so we're going to use this. So what we're going to mark out here is, again, it will be option 1, and we're going to trade a continuation trade, which I'm going to want to see a rejection of this fair value gap and then a closure. In this case, since we are above the low, a closure under this candle right here, which will make a new low for the day to trade a continuation lower, or I'm going to trade the reversal. So we're simply going to jump one candle forward right there. As you can see, this still goes, and there it goes. This jumped a little too far, but your entry would have been right here with a stop loss right under here. Again, targeting a 1 to 2, which would have been roughly right here. And we're going to see if this plays out. I already know this is going to play out because, again, it was Friday. You can see this keeps on running. But this would be an example of trading the reversal trade. What are we using, guys? We're keeping it really simple. And a simple strategy that has a solid 75% win rate with a 1 to 2R, even a 65% win rate with 1 to 2R, will work very often. What we're not making the mistakes that a lot of the beginner ICT traders, a lot of the beginner traders are trying to use these concepts are making. Again, fall in love with the first rejection, not understanding what is the most important time of the range, or understanding when to actually enter the price and if to trade a reversal or a continuation. Let's do one more example over here on Tradeful. Right here, it's the 9:30 candle, so we're going to skip 1, 2, 3, 4. And we'll do, since this is 9:32, actually, it's 9:32, 9:30, 9:34, 9:35. All right, right there. So this will be our range. Our 9:30 open would be right here on this candle. Right before that, we got this huge dump down, and our 9:35, or the bottom 9:35 will be right there. Again, we have one fair value gap sitting right above us. It's not in our opening range, but it is something that we can still note. So the way I would do it is I will mark out, obviously, my first fair value gap of the day, since I have nothing else in this range, and this falls pretty much essentially into it. I'm looking for a rejection here, and more than likely a close under the previous candle, which would be this 9:34 candle, to enter a short, or I'm going to want a close above this 23,105 level right here. We'll play a couple candles. 1, 2, 3. So this candle I can take, because again, now this took out this previous candle. So I can go short in this scenario. Now, I will be very careful here, and this is when you need to learn how to adapt to the markets, is that I would not have a stop loss all the way up here. It is simply too big for my liking. You could target a negative 50 points and target 100 points as your TP. This could totally work, but the way I personally would trade it, since it will be a big range, is use this stop as at the highest right there and target a simple 66 points to the downside. And at this point, I would enter a short position. Market sells. Again, we would do 1%, and I have no idea how this day plays out. We'll just see it play out. So there you go, straight to TP. Yet again, what you could have done as well, here you had two options. You could have also shorted off this candle, which this candle was our technical first fair value gap of the day. That was within the 930 to 935. As you can see, you got a rejection, and then you could have traded it down. You could have entered even down here. And catch that trade. But me personally, since this was the 929 candle, essentially going to 930, I would have still counted it. Now, if it was this candle right here, 925, I'm not gonna count that. But if you're within 1 minute, more than likely, I will take that in account, since it's a move that happened essentially right at the market open. As you can see, really little drawdown. He came up, just retested his 1 minute fair value gap here, and he gave a move straight down. Again, those are back-to-back days I showed you. I showed you the latest little price action that we had this past Friday as well. So that you know these are real examples. It works real time. And I showed you also the data behind it. Now, I do want you to know, this is not a get rich quick scheme. I've been trading for 12 years. And it took me 4 years to get any results. So a lot of you guys are giving up in your first year, and I did it for 4 years without getting results to eventually get to where I'm at. It's a really, really hard job, and watching one simple video is still not gonna help you master the strategy. There's a lot of things in trading. Emotions, actually understand the price action, other trades to look for. So if you are interested in getting better, investing in yourself, and looking to learn from somebody that's been doing it for 12 years, I do help and mentor students one-on-one. If you want to be part of the team where I trade live every single day, you can see me use the strategy I teach here for free on YouTube, live with my trades on the screen. Hit that first link down in the description. If not, just subscribe and stay tuned for all the great free video that I upload. And I'll see you guys in the next one.